Right, good morning, ladies and gentlemen. Thanks for joining us again on another edition of our Norrenberger Monthly Financial Market Review. From wherever you are, Lagos, Abuja, Port Harcourt, Nigeria, Africa, Canada, US. Good morning, and yes, welcome again as we do this, as we always do. Today, I'll be having my colleague with me, Uyomi Eya. Uyomi, good morning. Thanks for joining us.
Good morning, everyone. Good morning, Sam.
Great. Thank you very much, Yomi. As you all know, we'll be discussing several happenings around the globe. We'll talk about the global economy, markets. Then we'll also come back home to talk about the Nigerian economy, Nigerian market, as well as our outlook. But something interesting we'll be discussing today is also about Nigeria's pension industry. And as you know, whatever happens, whatever has to do with your money is quite important. Whatever happens to do with my money is important. And pension, it's all our money. So it's very important that we also have an understanding of what is happening in there. And today we'll be discussing something very interesting around the pension industry, and that is capturing the informal sector. We're having a guest with us who would help us to dissect some of the happenings around in the Nigerian pension industry. As you all know, we'll be starting our content is displayed on the screen. We'll be starting with the global view, domestic economy, as well as domestic markets. I'll have Uyomi to go ahead with global view.
All right, so starting off with the United States, as has been the trend with a number of central banks across the globe, they have decided to hold their rates. And, this is as a result of, though, as you see in the next point that we're looking to go into, that price pressures have in fact waned over the past month. And while there was a bit of a torn vote with regards to where the rate should be, there were risks cited as to how the numbers will move in the coming period. However, as a way to sort of strike a balance between both, they have opted to hold the rate at 3.5% to 3.75%. So moving to economic growth in the United States, moving from about 2% in the previous month to 1.5%. And now some renewed threats, I'll put it that way, has come as the President of the United States has announced new tariffs on trading partners ranging from 10 to about 12.5%. And this is another point of concern with regards to price movements, as this can impact, alongside the renewed risk in the Middle East, this can impact the price movements and overall growth in the economy. Now, moving to the European economy, in the Eurozone, the economy has expanded by 1% year on year. And this comes after there have been, softer movements in the prior period. And while this has been driven by general positive movement in the stronger or the more notable economies in the zone being Germany, Spain, and the likes, we can also attribute this to resilient government spending and improvements in investment in AI-related companies as well. Price pressures accelerated as well in the zone to 2.9%. And again, this is largely accrued to the impact of the energy price which ended up bleeding through to other sectors in the economy. And the European Central Bank, as a result of this, opted to hold their rates as a way to maintain a balance between stimulating and allowing growth while hedging against price pressures. Now, moving to Asia, we've seen that the economy has grown by 4.3% in the second quarter. While this is a positive move, it's a slight decline from the previous quarter's 5%. And while there has been improvement in a number of the sectors, this was largely or influenced by a decline in consumer demand within the economy. And then moving to Japan, price pressures ticked up over the course of the month, and this was as a result of a withdrawal of government subsidies, particularly with energy products. Moving to the conflict between the US and Iran. While there was some optimism as to a truce between both parties. The last month we saw renewed tensions, right, and this actually had an impact in with regards to energy prices, and obviously the tension with the Strait of Hormuz particularly. And this has pretty much shaped investors' behavior, again, due to concerns about demand and availability of oil and energy products. Um,
All right, thank you very much, Yomi, for that. We'll move straight to global market. And as we can see from our screens, right, we saw it's tied to technology movement, right? So we saw the Nasdaq losing about 3.2% following losses of about 3.1% in the previous month. A huge part of this was caused by SpaceX, and that's one of the companies listed by World Richest Man in the last 2 months. That was somewhere towards the end of June. But of course, in July, it had lost from its opening of 157 dollars per share to somewhere around 108.37 dollars per share, and that was just some of those pullbacks that we had seen from the initial opening by the end of June. Also, we saw Nikkei 225 losing about 8.14%, largely again as a result of some of the AI spending worries. Right, Wall Street tech dips, high cost tied to AI infrastructure helped to rattle the Asian market, and as a result of that, we saw pullbacks from that stocks. They had gained about 5.63 initially in the previous months. Looking at some of those commodities that we track, gold gained slightly, about 0.56%. Again, of course, reversal from the 11.45 that it had lost in the previous month. We saw silver retreat following a 20% loss in the previous month and then now losing 2.9%. But coal gained almost 5%, gaining part of the losses that was recorded in the previous month, while cocoa continues to gain over 6% following limited supply in the market, while soybeans also moved in tandem with cocoa. While we only had mentioned Brent crude earlier, Brent crude gained at the end of the month by over 20%. And that's following the reignited tension between the US, Iran, and Israel. We'll move straight to the Nigerian market to discuss our dashboard. I'll have Uyomi take that over from me.
all right, thank you, Sam. So we'll be starting off with inflation. As you've seen here, inflation ticked downwards as of June, moving from 15.93% to 15.91%. And while this move was, let me say, offered a bit of hope or optimism, the food basket remained a risk as it ticked up month on month. Moving to exchange rate has been relatively stable and gained at month's end to 1,368 naira to the dollar. External reserves too, as over the course of the month, we saw it go as high as 52 billion. So this is an indicator that there's more inflows coming into the market, bolstering our external position. And PMI, while we have continued to be on a growth trajectory, even though in the previous month we're not necessarily in the expansion territory. However, as of June, we got back up into expansion territory at 50.1 points. Crude oil prices, again, on the back of the escalation of the tensions in the Middle East, at the end of the month, we saw it grow to $87.94 from about $73 at the end of June. And looking at our capital markets the performance of our capital markets, we've seen gains. The NGX and NESD market cap ticking up positively over the past month. And the MPR from the last meeting that was had within the month, the committee opted to hold, right? Though inflation had ticked down, there was also the risk, as noted earlier, the food price movement of food, and risks following the tensions in the Middle East had led to this decision, and following that they had also noting that there had been months of upward movement uh, in the inflation rates. So as for oil production, we have noted another gain at the end of June, moving from 1.53% to 1.53 million barrels per day, rather, sorry, to 1.55 million barrels per day. And money supply has ticked up from about 129 trillion to 133 trillion. And this is comes even as auctions have been in the market to mop up liquidity. So we'll be moving to the local developments, starting strong with the pension sector. We note that the fund assets dropped to about 30.7 trillion in the month of May, as the most recent data that we have seen. And this is just due to how the equities market performed within that period. There was a lot of profit taking and rotation, and this impacted the net asset value. And moving on, we've seen that the PENCOM has transitioned to a digital onboarding and electronic processing, right, of payment processes. And this is just part of the efforts to digitize the industry and make things faster and more with the times. And we also note the I am alive verification exercise for all retirees, and this is also a way to maintain transparency within the sector, so we don't have cases where there's ghost collections or things of that nature taking place. Moving on to the central bank, the MPC, as noted earlier, held the rates, citing risks to possible upward risks, and just a way to hedge against inflation and ensure that there's growth in the economy. And the CBN also issued guidelines with regards to the purchase of FX by BDCs via dealer banks, and also the credit to private sector rose up to by 2.8%. That's up to about 89 trillion in the month of June. Moving on to the Security and Exchange Commission, their move to commence electronic registration on its e-portal, also an effort to digitize and streamline processes to maintain efficiency. And the IMF has retained Nigeria's growth forecast to 4.1% for 2026, and this can be attributed to some optimism with regards to some indicators that have come out over the period. And the S&P has placed Nigeria on a watch list for frontier market reclassification in the past month. And lastly, the Federal Allocation and Account Committee, FAC, we have seen an increment in their distribution in June, as where distribution has gone up to about 2.5 trillion in the month of June 2026.
All right.
All right, thank
Thank
you
you
very
very
much.
much, Yomi, for that, taking us through happenings in the Nigerian market as well as global markets. We now start looking at some of those indicators from the Nigerian fixed income market, where we saw liquidity system, financial system liquidity pretty much remained in the positive region, albeit a bit of those sinusoidal movement and volatility. But generally, seen it gone as high as 9 trillion naira at some point in the last month, but over time averaged around 1.5 trillion to about 3.7 trillion over the course of the month. Treasury bills yields, we saw some slowdown at some point in the month of July, but then a tick towards the end of the month. But of course, the last auction had given us indication that rates are beginning to taper down when it comes to the long end of the curve for T-bills. And that also played out, as you could see also from the slide of the FGN bond yield trend, where you saw that slow down towards the end of the month of July. Moving away from that, bond yield curve again, we could see pretty much similar trajectory, right, in the last 3 months. But we're now seeing a flat of the belly that we had seen initially in the month of June, where between that maturity of 6 year to about 12 year, we're now seeing that flat along the curve. But of course, it remains inverted. The long end of the curve remains pretty downwards compared to the steep of the short end of the curve. We envisage that there would be likely some form of correction as we move towards the end of the year and into next year, and that is occasioned by some of the new developments. Right, we're seeing the revised bond auction calendar for Q3 2026. With the government trying to raise about 900 million in the month of August and 1 billion in September. While for T-bills, we're seeing maturities around the region of 713 billion for August, but of course we are offering around 2.1 trillion. But I think one thing that is worth of note is the amount of maturities that we have in the next 3 months. Right, in August we're seeing it somewhere around 7 trillion naira, most of which are in OMO bills. In September, over 9 trillion naira, of course. Most of them are also in terms of OMO bills, and then for October to some almost 8 trillion naira. And what is telling us with the calendar we've seen from the T-bills and bond end of things is that government will be raising quite a lot from the open market operations, and that is pretty much expected, given that the CBN would continue to try to keep a leash on the naira. Don't forget, 2026, we're entering into an election year, and on the back of that, there is always this volatility around exchange rate. So there is a need to keep the FPIs even in the system. We've seen external reserves accrued to at some point 52 and slow down to 51 billion USD. But there's a need to keep that flows keep coming, and the only way to do that is to keep mopping up liquidity, attracting foreign portfolio investors with of course interesting yields, as we have seen in recent time. Even if lately we've seen that the CBN is trying to also manage the interest rates in that market by of course cutting it as cautious as possible without triggering too much changes in the market. Euro bond yield have remained pretty much the same dynamics that we've seen throughout the year. Right, it ticked up a little bit towards the end of July, but has remained largely averaged around that 7 to 7.1 region, while the yield curve pretty much has been relatively the same over the last 3 months, which is telling us that there's really not so much happening around that market. We'll move to the Nigerian equities market, where Uyomi will take us through.
All right. So in the course of the past month, we have seen a renewed strength in the market as coming from the previous month's performance. In the previous month, there was a pullback in the market, largely due to profit taking and rotation on the side of investors. But this month, month to date, we saw a 6.92% gain. And all of the sectors, I would say that growth or that positive movement was broad based, excluding the consumer goods sector that lost around 4% as for the others. And the banking sector, you would note, gained rather outstandingly when compared to the other sectors. And this was largely due to the strong activity within the sector and interest in a number of the stocks there. And as some of these companies have come out with their financial performance, that has also been a bolster to certain things that have taken place in the market. So a look at the best performing, we have Fortis Global there, gaining monthly gaining at around 136%. And this follows the recapitalization within the insurance sector. I think they have benefited strongly from that. And First Hold Co coming second place. And as they come out with their financials, we've seen notable recovery from them. And this has also sort of bolstered the standing and the interest of the company in the market. Moving to the worst performing stocks, you have QTix. So we have, sorry, some consumer goods names there. We have Nascon Allied, we have Champions Breweries, and some others, which pretty much points to the overall performance in the sector as a whole. However, the top loss there noted in Mick Nichols and Company and some others. Right. So, speaking to the respective portfolios, we've seen that they have also swung back or have gained more strongly over the course of the month, while the overall market performance still is still performing above what these portfolios are doing. I think we will note some positive movements as in the last month, the NCSI portfolio was around 36% and now has gained up to 46%. The defense stocks as well has moved to 36% from 32.7% it was during the previous month. And similar trend can be noted with the rest of the other stocks as compared to the NGX 30 and CG board, also performing positively and above the overall market performance. So, Sam, over to you.
All right, thank you very much,
All right,
Yomi.
thank you
This
very
just
much.
gives us a
This
glance
just
at
gives
some of the TCAs where expectations for dividend payments. So seeing MTN expecting payments in September, Presco, former Lafarge, now HBM, NGH Group not yet to be determined, Unilever Nigeria, Seplat, UCAB, and Custodian Investment, as well as the Initiate IP, VFD Group, and Guinness Nigeria will be expecting that dividend payment between August September. For the monthly performance, as we do track, just to see where the current month tracks in terms of history, the market gained about 6.92% in the month of July, as mentioned by Wiomi, trailing from the loss recorded in 8.37% in the last month, that's in July. And what that tells us is that so far in 2026, the market has only lost once. Then the question now is, how is the market expected to perform in the month of August? I think that the market, or we expect that the market will continue to pull back and gain strongly. And this is on the back of the expectations around the listing of Dangote refineries. We also have some other tickers that are expected to come into the market in Q3. One of the news that came out in the week was that Dangote refinery has now formally registered with the SEC to list their company by the end of Q3. And I think the expectation of that coming into the market could drive a huge rally in the market. But of course, we still expect pockets of pullbacks towards the end of the year for some of the sellers, profit taking. But so far, the market has done over 50%. We expect that that's also going to continue in the month of August through to September before those little sellers will come in October and at some point in November. And on that note, it is safe to say that we are done with the conversation around the market, right? And we would now like to delve into the major conversation of today. And today we have a veteran in the Nigerian pension industry who would help us to shed a lot more light in today's conversation. And it is quite interesting to me. But before we do that, let's introduce our guest today. Our guest is Mr. Afolabi Folayan. He's the MD CEO of Norrenberger Pensions Limited. Good morning, Afolabi.
Good morning, Samuel. Good morning, Oyomi. Really nice to be here.
Yeah, thank you very much for joining us. It's interesting to have someone from the pension industry join us for our conversation this month. And for us, it's quite interesting because the Nigerian pension industry has really gone through a lot of phases in recent years. We saw the last month numbers for June showing that the NAV had dropped for the industry. And of course, as Yomi had mentioned, it was largely as a result of stocks pretty much pulling back. But we expect that in July, when the recovery that we've seen in the market now plays in, we'll see that improve significantly. So we've seen consistently that industry has grown significantly, right? Now, how would you assess that progress in terms of asset growth over the course of the last few years in your views here?
Okay, thank you again for having me. So the pension reform has been one of the most consequential and impactful reform in the country. And the huge accumulation of capital has shown its success both in terms of capital growth and in other different areas. So in terms of capital growth, that's one, it's very clear. It's come from zero about 22 years ago to the 30 trillion plus that we are seeing today. Of course, there are other areas in which the economy has been impacted. First of all, is the fact that the market inherited a broken pension system in 2004, where you could see quite a number of people on the line trying to queue for pensions, a lot of people dying before they could get their hands on the pension scheme. Today, that is a thing of the past. Pension is easier to access, is smoother, and when you retire, you're very sure that you can get your pensions. The other part is the 25% loss of job that you can access to cushion the effect of a loss of job until you get a new job. This has been very, very helpful, especially in a situation where there's no social welfare system. So quite a lot of people have accessed this due to loss of job. Of course, the other issue is the equity for mortgage, where you can get 25% of your RSA balances to be on the home ownership ladder. A lot of people have accessed this and they become homeowners just because they've had accumulation of their pension money. Again, the scheme is professionally managed. So you can see that the investments have yielded very real returns when you compare to long-term inflation. Long-term inflation, as you know, is about 15%, and the market is doing much better than that if you look at the long-term return on investment. KIGA is about 17%, so it's done pretty well against long-term inflation. And finally, investments in infrastructure and the sukuk and even in commercial paper for working capital has been very good in terms of helping the real economy. So if you look at it all together, I think it's been a very impactful reform, and it's been very good for the Nigerian economy.
Yeah, thank you very much, Mr. Afolabi, for those insights. While we still stay on the topic, right? For our audience, if you have questions for based on what we had presented or to Mr. Afolabi, please you can put them down at the chat section or Q&A session. Drop your questions and we'll try as much as possible to address them before the end of the session. And let's come back to you, Mr. Afolabi. You had mentioned quite a number of things around development in the Nigerian pension industry, how we've seen significant growth from single-digit trillion naira to about over 32 trillion naira, barring last month's decline to 31 trillion naira. But I think one of the major issues has been the Nigerian informal sector, right? The Nigerian informal sector continues to represent one of the largest, and if I say untapped opportunities for pension growth, right? So if you look at the Nigerian economy, it's currently accounting for somewhere around 55 to 65% of the Nigerian GDP, while it currently employs about 80 to 93% of active workforce. So we know that in time past, the PENCOM has introduced or had introduced the Personal Pension Plan, PPP, and the initiative was to improve pension inclusion among self-employed Nigerians and workers outside the formal sector, right? But in your view, right, what can you say has been the biggest constraint to scaling this initiative? And then what policy, or is it a technology or market-driven intervention, would you think is most effective in accelerating this participation?
Well, thank you, Samuel. Thanks for the question again. So you're absolutely correct. Market penetration in the informal sector has been very, very low. And I think you've reeled out the statistics. About 80 million workers, 80% of them in the informal sector. Right now, the whole market is just done about 11.3 million participants, and maybe just about 300,000 of them are in the informal sector. So this is really, to say the least, a very dismal market participation of the informal sector. So I'll just approach this in three ways. Why have we seen such a low participation? The first I'll say is the poverty level in the country. Like, the pension product is a savings product. You only save after you've dealt with your daily needs. The only people that save is after they've really dealt with their daily needs. And most Nigerians live below the poverty line. I think over 100 million, they say, are living below the poverty line. So clearly, this is one of the biggest constraints against the informal sector participation. In countries where we've seen growth in informal sector, like China and Rwanda, there's been a move of people away from poverty. In China, for example, there's been over 800 million people that have been moved out of poverty in the last 40 years, out of a population of 1.4 billion. So close to 60% of the people have been moved out of poverty. So that's the greatest constraint, in my opinion, poverty, and reforms that can move people out of poverty will be the most impactful reform. The other element of a successful informal sector is that there should be ease of registration, ease of onboarding, ease of remittance, ease of query management, and clearly ease of withdrawal. Once all that is embedded on a platform of technology, digital technology, which I believe is available in Nigeria, but I think the only other thing that needs to make that come together is that we need an aggregator. We need aggregators. So for example, the formal sector has been very successful because you have aggregators, being the HR managers in the companies, PDOs in other MDAs. So these act as aggregators, they pull people together and they make payments. So if there are aggregators, you can maybe your money points or pay to have large level of aggregators. If you can entice them into the industry, that will be very helpful. And even if you talk to people like the Union of Road Transport Workers, Farmers Union, who have a large pool of informal sector participants under the umbrella, you can also find a way in which you can make them remit pension. That will be really, really very helpful in bringing the informal sector in. I think the last one I would like to say is most places where the informal sector has been successful, you've seen products that are bundled. Pension itself is not a very, mind my language, a very sexy product. It's not something that you really look out for. So what it is that most of the time it's a bundled product. If you bundle it with a loan or you bundle it with microinsurance, it becomes a little bit more an easier pill to swallow for the informal sector. As you know, in the informal sector, their payment is not regular, so their access to payday loan or structured loans are not very accessible. So if you have a product in which you are able to access loans because you are participating in the pension scheme, it becomes quite useful, and it will probably improve the penetration in that sector. So these are the three things that I think will be very helpful in opening up that market. Thank you.
Thank you very much, Afolabi, for that response. And it's good that you had mentioned around technology and how we could drive informal sector participation in the Nigerian pension industry and how technology can really play a lot of that, especially when you mentioned something around aggregators. right? I think this is an opportunity for you to also, sell what you might be doing in your organization towards achieving what you had mentioned, right? You had said that digital transformation is reshaping things in the sector. Earlier on, we only had mentioned how the SEC has also transitioned from paper now towards digitalization, right? We also saw PENCOM also rolling out the same thing. And this means that the regulators are already embracing technology as the new today, not even tomorrow. Now, as your organization, how are you leveraging technology to improve the accessibility of pension and also improve on customer experiences, especially as regards this personal pension plan?
Okay. Thank you again. These are very, very solid questions. They speak straight to the heart of the problem. So the digital space has been a very great disruptor, especially in the financial services. So every company must embrace digital technology to survive in the current digital age where information has been fully democratized. So our first focus in Norrenberger Pension is to use the technology to achieve ease of onboarding and ease of remittance, as well as ease of withdrawal. So when people find it easy to onboard, then they tend to be more they tend to be a little bit more receptive to joining that system, especially for the youth who are used to things like OPay, PalmPay, the way Money Point gives them ease of onboarding. So that's what we are focusing on in the first place, to ensure that there's ease of onboarding and ease of transaction of business. The other part we are looking at and we've ramped up is our engagement on social media space to provide quick information. We also are looking at a chat bot to improve responses to queries. Finally, we're leveraging on technology for improvement of our research capabilities and to help in our investment returns. And finally, I'll say in the long term, we will be investing in virtual branches using robotics and AI to serve our clients in terms of advisory services and retirement planning, so that everything will provide a wholesome experience using technology. So these are the things that we are doing currently. We are focused on getting people to onboard easily and withdraw easily.
All right. Thank you, Mr. Afolabi, for your insightful perspective. So moving on to the next question we have for you. This one carries a bit of controversy, and I think it's something that a number of our participants will be interested in getting some more perspective on. And it's with regards to the discussions around the increase in pension contribution, right? There is the concern, given the macro environment that we are living, even though we've noted some notable improvements, there's still issues or problems with regards to the price pressures and costs of running businesses. So, do you believe this is something the industry is ready for? And if at all, how should the policymakers be able to balance this objective of bolstering the retirement savings? Because that's notably the reason why they might be doing this, while noting the reality of the employers and businesses involved.
Okay. Okay, you're talking about the increase in mandatory pension that is being spoken about in the press.
Yes.
Oh, okay. Thank you very much, Yomi. So, so the news has been all over the place about the possibility of increase in the mandatory pension. And I see the point that those who are advocating for the increase in pensions are making. Like I said earlier, the pension reform has been one of the most impactful and successful reforms in the country. But pension is not the most attractive product to sell, because you can be in the scheme for 25 to 35 years before you get your money through the pension. So sometimes what the policymakers do is to make it mandatory for you to do something that is good for you. Because if you leave it to everybody to plan their own pensions, they may just never plan the pensions, and then they fall into what you call old age poverty, which is not very nice at all. But having said this, I believe the clarification has been made that the suggested increase is from the employer and not from the employee. So this is more about employers' contribution, which will not negatively affect household income. But as you know, the contributions are derived from salaries, and as salaries increase, pension also increases. So for me, I think what we should do is to try and see reforms that will increase workers' salary, and it will achieve the same thing as trying to increase the mandatory pension. So it's actually reforms that allow us to have consistent salary increase that will be in line with inflation, and then you won't need to really increase the mandatory pension scheme.
All right. Thank you, Mr. Afolabi. And so moving further, in the last year, that's particularly in September, the Pension Commission introduced some guidelines pertaining to the participation of Nigerians in the diaspora, right? Pretty much allowing them to contribute to their retirement savings account with their foreign currency or their foreign earnings. And now it's almost a year now. Next 2 months, it'll make it a whole year since that particular circular had been put out. So, how would you assess the impact of that policy? And do you, or what possible measures do you think can be put in place to increase participation from Nigerians in the diaspora, in the pension sector?
Okay, thank you. Yeah, time really flies because you're right. In another 2 months, it will be a year that the policy was put in place. So I think and I believe that it was a well thought through policy and product, and because it addresses the yearnings of key sectors of Nigerians' population, which wanted to secure their savings against volatility in exchange rate upon retirement. So I think it was a well thought through product. But like you said, the adoption has not been not in line with what the product was supposed to do. So the key reason I believe is that onboarding has not been very seamless. It's been very cumbersome for you to onboard people from abroad. And then the cost of Forex transfer has been very high. So if we can fix those two, make onboarding seamless and make the cost of transaction very low, I think we'll see much better participation. Then the second thing is that really most Nigerians abroad have the pension that is dollar denominated or foreign exchange denominated. So in America, you have your 401k. In UK, you have different pension schemes. So the people that really need the product are Nigerians who earn in Naira and want to secure their Naira investments in a currency that is that does not fluctuate and that is stable. And unfortunately, Nigerians earning in Naira are not eligible. So I think what you'll see is a gradual ramping up of that product over time as we fix the issues relating to onboarding and the cost of fund.
very much, Mr. Falabi. We have some questions trooping in, and I'm not surprised that we are having these questions coming in because pension is a very touchy subject, as you'd also reckon, right? Let's start with the first question, and the question is around. It says, enhanced development will help positively, will impact positively on size of pension assets eventually. How can we scale pension assets investment in infrastructure development? We had mentioned at some point the PENCOM allowed PFAs to be able to invest, to increase their exposure into equities markets. And we saw how that has driven market growth or the asset growth over the last few months. Now, how can we now get to that point where we can now scale that asset through development in infrastructure?
Okay. Very good question. And I can see why a lot of Nigerians want that kind of impactful financing, especially in infrastructure and real estate. And I can say that the leadership in the industry are looking in that direction very, very closely, because the infrastructure deficit in Nigeria is huge, whereas generation of transaction in that space has been very, very little and far in between. I mean, you have your few infrastructure bonds and such like, which have not been very, very impactful in that sector. But what I can say is that the industry leadership is looking at a framework where security of the investment as well as securities of the returns on investment makes it very attractive for PFA players who have that fiduciary responsibility to keep pension assets, to be able to invest and go to sleep without loss of funds. So let me just say, watch this space.
All right. That's a good one. Watch this space. So the next question that we have here for you is that seeing as pension, the PENCOM recently revised its investment regulations, right? That expanded limits across certain asset classes. So how do you think these changes have influenced investment strategies in the industry, and what trends have you noted?
It has had a very fundamental effect on both investment strategies as well as the impact on the growth of the fund. So, for example, because of the larger access to voluntary investment across all the funds, you've seen that the strategy of the PFA managers is to put more money in equities over the last 1 year. In fact, over the last 2 years, when the increases have been guided by the regulator, and because the equities has done pretty well in the last 2 years, you can see the serious impact it has had. It has had with the growth in the AUM of the industry. Now we are talking about 31 trillion and possibly even 40 trillion at the end of the year. And this is impacted by the fact that equities market has done well and PFAs have been allowed to invest in that sector. Of course, the other issue is that because voluntary investment has some volatility in it, you can see that the portfolio suffers a bit of volatility. And in May and June, when the market reversed, you can see the impact on people's RSA balances. So what this means is we have to balance that investment with risk management framework that allows us to have a guardrail around those investments and proper diversification to cushion the effect of volatility. So it's good on one side because the fund is for long-term investment. but again, it puts in a bit of volatility into the RSA portfolio. And people must understand that you can suffer a bit of volatility for long-term growth. Thank you.
Yeah, thank you very much, Mr. Falari, for that response. While speaking to the response, right, and even the initial one, we also understand that the Nigerian pension industry, right, it's a very it's meant to be a conservative fund because at the end of the day, it's people's retirements that you're investing.
Correct.
So, of course, investing in infrastructure, for example, and playing around other forms of investment might not be considering that some of these investment could have long gestation period, and some of them could be tied in investment for 20 to 25 years before you start reaping the fruit of those investments. And the downside is that when a retiree comes in and says they want their money, you can't be telling them that their money is in
The money
is in
is
one bridge.
in.
It's between a bridge between Lagos and Ibadan, and nobody's going to hear that from you. So, of course, there is a need to invest in things that are highly liquid, that you can easily, take repatriate the funds for the owners. But moving to the questions from Chidi Kachi, he or she says, "Hello, good morning, everyone. I have a question. I was in paid employment with a multinational firm and was contributing to a regular pension, including my employer. Now I am out of paid employment. I'm running my business. Do I continue with my existing pension scheme or do I need to move to the PPP or micro pension, as the name is called?"
Very good question. So there's really no pathway from moving from a formal sector payment into the informal sector payment. So the only thing is that you can continue to contribute in your current PIN and in your current fund, but you need to now do what you call a voluntary payment because you don't have an employer who will aggregate for you and send the money using their employer code. You are now your own employer, and you can do what is called the voluntary pension. Once you pay into that PIN, it will be aggregated into your Fund 5, which is the informal sector fund, and then it starts reflecting in your portfolio immediately. So you don't really need to lose sleep. If you continue to contribute, it will go into that same PIN, and it will be aggregated under the informal sector financing portfolio, sorry.
I think that's an opportunity to tell Chidozie that you can as well move that your fund to Norrenberger pensions. I'm sure they'll be happy to welcome
yeah.
in case you are not.
Correct.
All right. Ruth Ishaya has a question for you. In fact, two questions. The first one is one of the criterion for accessing 25% mortgage is for employer and employee contribution to be up to 60 now, 60 dot dot. I don't know what that, but it's actually hard for an employee to acquire up to that due to the competitive as is based on contractual basis. Please, what is PENCOM doing regarding this? I don't know if you want me to go through the two questions or I should maybe take this first before we go to the next question so that we don't.
Okay, I can take this and then we can take the other one. I believe what it means is that being consistent in paying 60 months straight before you're eligible is difficult. But again, at the end of the day, there has to be a cutoff. Number one, I think the 60 months is so that you can accumulate enough for you to be able to access a reasonable house, because the equity for mortgage is not for land or houses that are being built. They are for houses that are already built and are in livable stage. So I think that 60 months is for you to be able to acquire enough to be able to pay equity for the mortgage. And again, it is equity for mortgage, is not really money for buying a house. So that's just for And right now you have equity that take as low as 10%, some as high as 25% of the cost of the property. So if you're able to key into things like MREIF that have just 10% participation, then the 60 months of consistent payment will be very, very helpful. But I think that really is where, that's really the way I can answer that at the moment. Yeah.
Yeah, thank you very much, Afolabi. And I think for the worry for Ruth, right? I think that could also be we could have people from the commission also with us listening in, and they could also take that as part of the conversation because fair point again, 60 months contractual basis, chances are you might not get that. The person's second question from Ruth is imagine a person is not working in the government sector, but in humanitarian, which the retirement time frame is not quite clear and is dependent on contract. At what age or how can he or she access pension? I think you
Great.
mentioned something like this earlier, but I think it's fine if you can respond to it. Yeah. Afolabi, please go on.
Yes, yes. So the minimum age in which you can access your pension is 50 years old. So even if you retire earlier, maybe in your 40s or your mid 40s, you are still not able to access your pension until you are 50. So whether you are working in an NGO in a humanitarian sector where there's no clarity in terms of retirement age, the regulators have put an age of 50 for you to have access to it. Because remember, what they are trying to prevent is old age poverty. And when you are not very strong to work, you have enough money to come to you on a monthly basis to cushion the effect of your working life. Obviously, when you are still 50, you are still very strong and you can walk, but some people may want to access it at the age of 50. So that really is it. But if you are talking about loss of job before you retire, there's also an ability for you to get 25% of your RSA balance as temporary access through loss of job.
Yeah, thank you very much. I was going to mention that because, of course, if you're retiring at 40, you might as well technically say you're out of job and you take 25% of your refund, and then I think that should do something. But thank you very much, Afolabi. It's really been an interesting conversation. We have one more question from Larry. It says, as demographics, regulation, and investment markets continue to evolve, what do you see as the single biggest challenge and the biggest opportunity for pension funds over the next decade? So it's giving you the heart of a prophet to look at the next 10 years.
Okay. Well, in Nigeria, the two biggest issue is penetration. Penetration and market participation. Penetration being the AUM to GDP, which is low at 8% compared to similar markets, which is much higher. And of course, participation. The number of people that are participating in pension is just about 11.3 million out of 80 million, which is roughly about just 9% of the population, whereas in other economies it's much higher. So those are the two greatest issues. And if we can find ways of solving them, then our pension asset growth will be out of this world. Imagine that we have maybe about 25 or 30% participation in the market. That will totally extend. It will blow out our capital formation in that regard. And what do we need to do to bring in the informal sector, which are the people that are absent? I think maybe incentives can help to bring them in. In other economies, what they've done is to try and move people from the informal sector into the formal sector. So the informal sector has become very, very small and then you can track people in the formal sector so that they can bring their money in. And this can be done using incentives like tax incentives, because right now, the really reason why people have not formalized their businesses is because of tax and how they can what's it called, evade or avoid tax. Maybe that's a better word, to avoid tax. So if there are tax incentives that can bring people from informal to formal, then participation and tracking will be easier. And I think basically other incentives that can help participation will be the way to go.
Yeah, interesting there. When you spoke about how we can grow the asset base of pension industry, I just thought in my head it would be interesting to see where PFA is now own banks, own insurance. Just like in some
Yes,
clients, you have insurance companies owning banks and all that. You can have pension industry now owning several other business, either through equity or venture capitalist and whatnot, right? To be interesting.
yeah, spot on, Samuel, because pension is long-term money, and the size can actually grow. It's grown very, very deeply in the last 20 years, from next to nothing to 31 trillion. And regulators are talking about 100 trillion by 2030. So, yeah, watch this space. We might be buying
Okay, Vision 2030. I
commercial
think we have
banks.
one final question and then we'll make a wrap there. He's saying if you could give one piece of advice to someone who has about 20 to 30 years until retirement, what would it be? And what's the justification for that advice?
Well, start early. That's a very that's the most that's the most basic advice that you can. Start early, be consistent. You will be surprised about the power of compounding. If you look at your investment in a year or in two, you'll be pretty shocked how your balances have grown, especially in situations where the market is growing very fast. Today, I saw the ASI of 57.9%, and the market is projected to end this year at 75%. What that means is if you put 1 million in the benchmark, you end up with 1.75 million, closing on 2 million, just by putting your money in the market. So what I will say is start early, be very consistent, and put in that your money, and do AVC. That's what I will tell my young self um, in the way to go.
Thank you very much, Afolabi. I think it's also a very fair point there, right? For Nigerians also, you can, do that. He had mentioned it, voluntary scheme, right? Add as much as possible because that's also an opportunity to reduce your possible taxes, right? If you can do that as much as possible, it gives you a lot more base to grow your fund. If you're also a young person, maybe you can consider moving funds. Naturally, you find yourself in fund two. Of course, that's very conventional, conservative. If you can take a lot more risk, why not ask your pension fund to move you to say fund one that has a lot more exposure to variable assets? That way you can grow also your investment faster over time. Those are just some of the nudges that you can consider going forward. Thank you very much, Afolabi. It's really been an interesting conversation. I think you would agree with me that Afolabi has really done just.
Yes, absolutely. It has been a very insightful and interesting conversation.
All right. Thank you very much, Yomi. Thank you very much, Afolabi, once more. For those that came a little bit late, Afolabi Folanyo is the MD CEO of Norrenberger Pensions Limited. And for everyone who has joined us from different parts of the world, we say thank you. We do this every first Monday of the month, called the Norrenberger Financial Monthly Financial Market Review, where we analyze what is happening in the global and domestic space. And on the back of that, we make our projection into the next coming month and towards the end of the year. At the end of the day, what matters is that we are masters in wealth creation. We want to give you information that helps you to optimally manage your wealth, manage your money, grow your wealth. And at the end of the day, we can all move away from that poverty line that Falabi had mentioned earlier in this conversation. So thank you again very much for joining us. We'll see in the month of September. Until then, keep making money. Bye-bye.